Hello, welcome back to my channel. Before you are able to identify this complex chart, which is called the trading chart, you need to first of all know this individual candlesticks and what they represent. You also need to know what these candlesticks represent when they come in pattern and how they can affect the market. If you are new in trading or cryptocurrency, I know this is one of the most difficult phase for you, and that is why in simple terms I'm going to be explaining what candlesticks represent and how you can use them to your advantage. If this is your first time here, you're welcome. Kindly subscribe to my channel. This is the way you can support me into making good videos that will profit you like this. I teach you how to make money, especially through cryptocurrencies and various ways you can make money online. In this video, I'm going to teach you several candlesticks. I'm going to teach you everything you need to know about candlesticks and their patterns. We're going to give examples and how they affect the market. When you see this, what does it mean? When you see that, what does it mean? And how is it going to benefit you? I think this is the most important part of trading. So this video is going to be a bit lengthy. Endeavor to watch to the end so you don't miss any part of it. Candlestick is a type of price chart in technical analysis that is used to display the highs, the lows, opening and closing price of a security for a specific period. Say one day, say 1 hour, 4 hours, even 15 minutes, 30 minutes, and so on. Candlestick is very important for analysis in the market because it helps tell what traders are thinking per time and what direction we are going to move. Remember, it is candlestick that enables the identification of your resistance level and your support level. You know all the trend lines, the pivot points. It is candlesticks that enables that. This price reading go a long way when you want to analyze the market. What you can see on your screen right now is a candlestick. This is what a candlestick looks like, and it is explaining what has happened in the market for this period of time. Okay, let's say this candlestick is trying to pass a message across to us. You see that it opened at 10 and then the price was pushed down, which is the low. It was pushed down to 5, and then the buyers pushed the price from 5 all the way up to 25, and from 25 sellers pushed it to 20, and that was where it closed. Now the opening for this candlestick is 10, which is the point it was initiated. The lowest it went to was 5, and that is why it is low. The highest point this candlestick went to was 25, and it closed at 20. You can see the illustration using this arrow here. I think this would make it easier for you to understand. The long part of this candlestick, which you have at the top and at the bottom points, is called the wick or the shadow, and then this part is called the body. A candlestick can be red or can be green, which connotes bullish and bearish. When you say a candlestick is bullish, you're saying it is green, the price is going up. When you say a candlestick is red, you are saying the price is coming down, which is also known as bearish. So you have to understand bullish and bearish. Bullish means up movement and bearish means coming down, and the colors are green and red respectively. So I'm going to be sharing with us some famous and very important candlesticks, as well as some very important patterns you need to know as a beginner. If you master these candlesticks and you apply them properly, it is going to better your trades in a very short time. So the first candlestick I want you to take note of is called the hammer and the inverted hammer. A hammer candlestick usually has a very long wick below and a small body at the top. Right? When you invert it, it becomes an inverted hammer. These are reversal candlesticks. Reversal candlesticks means candlesticks that would reverse a price trend. A hammer or an inverted hammer is most effective in a downtrend, which means when there is a downtrend and you see a hammer, it tells you that the market is going to reverse. When you see a hammer or an inverted hammer in a downtrend, it tells about a reversal of price. They are also referred to as the hanging man or the shooting star when you see them in an uptrend. In this diagram, you can see that for a downtrend, what you have here is a hammer, and for an uptrend, what you have here is a hanging man. Even though they are alike, like I said before, colors does not really matter for this candlestick. It can either be green or red, whichever. And the next candlestick I'll talk about is the doji. Doji is a very popular candlestick which is well known and has a great impact on the market when seen. When you see doji, it can mean a continuation in trend, it can mean a reversal for both an uptrend and a downtrend. The practical explanation for a doji candlestick is that the market is equal. It means the buyers and the sellers are balanced, because what happens here actually is that the opening and the closing price is almost all at the same point, which means you're going to have the same wick or shadow at the top and also at the bottom. We have 4 types of doji candlesticks, and they are the normal doji, which I just showed you. We have the dragonfly, we have the gravestone, and then we have the long-legged doji. You can see the neutral or the normal doji, which has its opening and closing almost at the same point. And the dragonfly, you can see that the buyers pushed the price up to the point that it closed at a green top. Then the gravestone is one which the sellers sell off until it closes as a bearish red. The long leg doji usually has a very long wick at the high and the low, but the closing is also at the middle. It can slightly be away from the middle, but the most important thing to identify a long leg doji is its long leg, which it was named after. Just like I said, doji is used as a reversal for a trend, especially when it meets a trend line. When you have a support level or a resistance level, then the market falls to hit that point with a doji candlestick. You can say it is going to reverse the price. But when you are not in a particular trend zone and you see doji, it can serve as a continuation signal, which tells there is going to be continuation in this particular trend. Say the market is going up and you see doji in between, especially the normal doji. It tells you that the buyers and the sellers are equal, which means there might be a continuation of that trend. So the next one here is the spinning top. The spinning top, as you can see on the screen, is almost like the doji, but here you have a little body and a long wick or shadow, as you would want to call it. A bullish spinning top is green, while a bearish spinning top is red. Remember I told us about color previously. This candlestick mostly tells us of a continuation signal. The combination of this particular candlestick with other candlesticks, which I am going to be explaining later, would give you another interpretation to the market. But mostly when you see this at the end of a trend, it tells about reversal also. Here color does not really matter, because it is almost as though the buyers and the sellers are equal, even though they are not. Remember, there is usually a small body in a spinning top, all right, being it's the bearish or the bullish spinning top. So when these candlesticks are combined together, they form what is called the chart pattern. And this pattern is also very important for market analysis, especially those who are going into long-term trades, because the candlestick pattern actually gives a stronger signal with time. It combines previously shown candlestick for that time frame and helps you give a prediction for the market, especially for a series of the next candlestick. Now, the first I want us to talk about here is the 3 white soldiers. You can see that the 3 white soldiers have 3 bullish candlesticks. As a matter of fact, the 3 white soldiers is a candlestick pattern that is for a bullish movement, okay? And it is most effective when you see it in a downtrend. When you see these 3 white soldiers hitting a support level in a downtrend, it gives the best signal for that point. So you can go into the market because it clearly tells about a reversal or an uptrend. Remember, the 3 white soldiers is a bullish candle signal. Then we have the descending red candlestick, which is called the 3 black cows. Okay, 3 black cows is a bearish candlestick pattern which tells of a bearish movement. This candlestick pattern is most effective when you see it at the end of an uptrend. When this candlestick appears, especially at a resistance level in an uptrend, it tells that the market is going to be bearish, which means the market is going to fall back down. The next candlestick pattern we're going to be talking about is the bullish engulfing and the bearish engulfing. Bullish engulfing is usually 2 candlesticks. Okay, the first one is a red candlestick with a big body. small shadow at the top and the bottom. Then there is a bigger green candlestick after the red, which overshadows red candlestick. This is called the bullish engulfing, which tells about up movement in the price pattern. Bearish engulfing, on the other hand, has a smaller green candlestick followed by a bigger red candlestick. This tells that there is going to be a fall in the price, and when you see this, especially in an uptrend, it tells about reversal, it tells about bearish movements. Having said this, we're going to the next one. Remember, these candlestick patterns I am sharing with you are the very basic and most important ones that you can understand right now and begin to benefit from. The next one I'm going to be sharing with you is called the morning star, and the morning star comprises of 3 candlesticks. This candlestick pattern is a very great one, and it tells us that there is going to be an up movement in price. A morning star candlestick pattern is a downtrend reversal candlestick pattern, which means when there is a downtrend and you see this candlestick pattern at the end of the downtrend, it clearly tells you about a reversal in price. You would have to check out for the confirmation with other technical indicators so that you'll be sure of what the markets would be. With this basic yet very important candlesticks and patterns I have shared with you here, if you master them and apply these principles I have shared with you, it will help you level up in your trading game. I hope this video was helpful. Kindly subscribe to my channel and turn on the notification bell. If you have any question regarding all I have just shared, or there is a particular candlestick or pattern you want me to talk about, you can just go to the comment section and type it below. If you enjoyed this video, do well to share and also like, give a positive comment, and see you next time.